So flat, but the focus is on mid-cap IT companies. Cyient is the next one on our radar. It reported a mixed set of Q3 numbers. The company has achieved 3 consecutive quarters of improving sequential revenue growth. And the management in the conference call yesterday also spoke about achieving a 15% EBIT margin by Q4 of next year, Q4 FY27. That is for the main DET business. Sukamal Banerjee, Executive Director and CEO at Cyient, is now joining in. Thank you very much for joining in. Mr. Banerjee, you've said that FY26 will be a year of stabilization. FY27 will be the year of consistent growth. What kind of revenue growth should we expect for the overall business, all the 3 entities combined? And then if you could provide a little more detail about the digital engineering business, DET.
Firstly, good morning and thank you for having me. As you know, we do not give guidance. So from a perspective that you mentioned, which is with regards to how we see the future play out, definitely from our plan perspective, we would like to drive high single digit or I would say high single digit and probably on the borderline of double digit growth year over year is what our plans are. But at the end of the day, it is what our ambition and plans are, and that is what we are working towards. Our focus is quarter over quarter. As you know, we are a turnaround story, and we have been working hard on that turnaround. And some of the results are showing up in Q2 and Q3, as you have seen. And we have some ways to go, and we continue to be cognizant of that.
Okay, got that. So FY27, the aspiration or the ambition is to hit high single-digit revenue growth, borderline double-digit, but this is not a formal guidance that the company is sharing.
That is correct.
For Cyient. Got that. And particularly Q4, considering that there will be furloughs, what should we expect Q4 versus Q3?
So again, we do not give quarterly guidance as well, but we remain positive in terms of continuing our growth trajectory. And I'm talking about the DET business. From a semiconductor side, as you have seen, the semiconductor business has grown double-digit quarter over quarter over the last 2 quarters, and they continue with that momentum with a very increased order intake that they have announced. So I think overall, from a consolidation of Cyient DET and Cyient Semiconductor, which we report together, we should be on the growth trajectory.
All right. Hi, Mr. Banerjee, and good morning and good to see you in. What about bridging the gap towards that 15% guidance? I think it was towards the end of next fiscal. Tell us, how do you do it? And does that hold?
Yes, it does hold. So 2-3 things. Firstly, obviously, if you look at our numbers for the last couple of quarters, we have seen marginal increases, which is reflective of a couple of things. We took a very conscious decision that we are not going to slow down our investments. As shifting our service portfolio and our market portfolio is a very important aspect to our midterm to long-term growth objectives. So if you have to achieve the numbers that I'm talking about from an ambition standpoint for FY27, it is important for us to make sure that we make those investments now. So we've continued to make those investments. We also took some restructuring costs in both Q2 and Q3, and those are reflective in the numbers that you see. As we go forward, while investments will not ramp up, there will be incremental ramp up on investments. The restructuring will go away. And that creates a tailwind for us in terms of margins, which you hopefully should start seeing from Q4 onwards. And we have to continue working through FY27. It will be a combination of our continued focus on cost takeout, on largely non-people cost, and also a combination of making sure that the growth in revenue that we are talking about leads to lower absorption of our overheads.
Mr. Banerjee, morning, Prashant here. Could you give us the performance, the loss from the semiconductor business in the third quarter and April to December? And when will this stop being a drag?
Sure. Firstly, I think we need to look at semiconductor business slightly differently. As you know, our focus on semiconductor is a product focus. It is not a services focus. And like in the early journey of any product company, there will be investments, and that is what we are doing. From a perspective of guidance, we shared about this in the investor call also. Our focus is to become EBIT neutral in FY27, and that's something we are definitely working towards ensuring. So as the business continues to ramp up and our investments play out in terms of revenue stream showing up, we are confident that's going to happen.
What are revenues now and late 27 or, I mean, in terms of breaking even?
So in FY27, yes, we'll be, so we are not talking about the entire year. Sometime in FY27, we will become EBIT neutral is our guidance.
And what will revenues be from this business in 27, approximately in the ballpark, just to get a sense?
I'm sorry, I didn't get your question. Can you come again?
What will revenues be in this from this business in FY27?
Okay, so I think you have seen the revenue trajectory that they have demonstrated, which is double-digit quarter-over-quarter growth. And obviously, as the base builds up, that may be difficult to sustain, but we are confident about the growth trajectory they are on. We have many things in works from a perspective of their growth trajectory, and we'll definitely continue to see that number play out.
Okay, let's...
one more question on the semiconductor business. What was the loss so far in the semiconductor business at the EBIT level in Q3 or 9 months FY26?
I don't have that handy. We can get back to you, but I think as I mentioned, our entire focus on the semiconductor business is what is our investment line and what is our revenue growth that we are driving. That is how we are managing that business, and we'll continue to manage that business for the time being.
Okay, all right. Since we're talking about this business, tell us about the deal signed with Kinetic Technologies. You're going to be paying close to around 900 crores, effectively doubles your target market. Tell us the funding of this, and will it be EPS accretive in year 1, year 2?
Yes, it is EPS accretive in year 2, and that's what we announced when we announced the deal. From a funding perspective, it will be a combination of cash and debt.
Okay, you want to give us the mix out there, and how much will it add to the top line in FY27 itself?
So from a mix perspective, it is something which it is to be determined as we get closer to our closure, which is sometime expected in April. That is when we're going to take the final decision. It will have a healthy debt component, and there will be cash as well. The exact split will decide at that point in time. And there was a question around the revenue. It is going to double the business that we have today in terms of overall run rate.
So when you give us that FY27 guidance of high single digit, maybe closer to double digit, how it will be aided by the some contribution coming in from this acquisition, Kinetic Tech. So can you give us a sense of what organic growth for the company will look like?
No, our numbers that I'm talking about is for the DET segment. Semiconductor, we report separately. For the DET segment, there have been no acquisitions. And the numbers that I'm talking about and sharing in terms of our ambition is our organic growth. So as and when an acquisition happens, obviously we'll talk about it at that point in time.
No, got that. Fair point. Any more acquisitions that you're looking at for the other businesses?
Sure. I mean, we are continuously evaluating the market like anybody else in our business. As things change, as I said, we are a turnaround and a transformation story. It is important for us to make sure that we are changing our portfolio towards more higher growth areas. And we have consistently talked about in our investor calls as well as to the investors that it is important for us to make sure that we acquire higher growth sectors, which is largely around digital and data, which has a significant overlap with the business that Cyient does in terms of future transformation, as well as there are certain segments or industries in the market which are very big, where our presence is minimal, like automotive, like software, where we would like to definitely look for strategic transactions as and when they become available.
No, makes sense.